our strategy in the guided journey is not just from we sold you, we integrated you, right? And now, we wanted to have some pull through. We have a team of folks in the partner success team. It's their job to help these folks to, pull through their merchants and what can we do better for your business, and listening to them on, what their roadmap looks like and how we fit into that and how we can help them.
Hello, Jimmy Napso here with Embedded. Today I have my big brother, Jimmy Napso, with me. Serial entrepreneur, co-founder of Fortis, founder of Cambridge Payment Systems, founder of Airtime Trampoline and Game Park. Jimmy, welcome.
Thanks, Tim. Thanks for having me.
All right.
Appreciate it.
This is a rare opportunity on the Embedded podcast to have my older brother on, and we're going to be talking everything from family to life and business. All right, here we go. We're going to dig in a little bit. Let's talk a little bit about family life. 5 of us in the family. You are the oldest of 5 siblings. I am the middle child. So you can imagine the struggle of being a middle child. The world knows. At one point, the youngest child for a few years until our younger sister was born, and then finally younger brother. So there's a lot of responsibility that comes from being the oldest child, but I think also what I want to touch on here is that we are first generation born in this country, which comes with even a higher level of responsibility. We grow up fast. You grew up the fastest, I would say, in our family, of course, being the oldest of our family. But there's a little more to it that I would love for you to talk about, which is 9 siblings on dad's side, 8 siblings on mom's side. And on one side, you're the oldest grandchild. On the other side, close to the oldest grandchild. So a little bit about that growing up, a little bit about, growing up in a family where you have, Americans for the first time, right, in the family, and what that was like.
Yeah, no, for sure. So, thanks for having me again. Like, it's kind of cool to be here with you. And I was waiting for my turn. I was kind of curious why I'd be way down the road, but it's okay. We'll let it slide. But yeah, it's been, our family history is, interesting. I mean, obviously our family was from Iraq, and, Roman Catholic from Iraq. So a little different, but kind of Babylonian heritage. So we're called Chaldean for those folks that'll be looking at this at some point. So, when you think about generationally, like what happens from a family perspective and kind of legacy, some of it's very innate in the way that we think about, our grandparents and how they grew up and always wanting better for the next generation. So we think about, I think about our grandfather, specifically our paternal grandfather. He was an orphan, didn't read or write at all. Came from a small village to go down to Baghdad to work when he was 9 years old, and ended up just, being very gritty, very hardworking, he and his family. And really the idea behind a family unit at that time was different than now. Everybody worked kind of for one purpose, and that was just to make the whole family better. And it was different than what you might see today. Like they were working to just put food on the table. There wasn't entitlements from the government to help you out and things like that. So you didn't work, you starved. So they started at a very young age. And so he wanted better for his children, and he was able to do that even though he couldn't read or write. And he was a very successful entrepreneur in Iraq, owning liquor stores and bars. And then, for our dad, as religious persecution started to happen in the 60s in Iraq, it was the time for him to come to the States. So same way, looking for a better opportunity for his children, and he came over and really was in a position where he took a huge risk, leaving his family, coming when he was by himself, 17 years old, and same kind of thing. Worked in the automotive industry, which was big here, which is a reason why a lot of our people settled here in Metro Detroit. But when the '67 riots happened in Detroit, all the big supermarket chains, national chains, pharmacies, liquor stores decided it was too dangerous for them to be in Detroit, and they decided to move out to the suburbs, which opened an opportunity for immigrants to come in who had large family units that were willing to work together to take these over. And so we found success that same way. And the same thing, our father wanted something better for us to go to school, for us to become professionals. And we still had to work in the family business, of course, and that wasn't something that we could slide on, but it really pushed us in a way to, be much more appreciative to what we had. And so we were very lucky to, go to good schools and have great opportunities, but we also saw the other side of things. We had the opportunity to work in very low income areas in Detroit and really get an appreciation for, what that looked like for different folks and the struggles that they had. And certainly it made us better from an entrepreneurial perspective. And then to your kind of question on the idea behind responsibility, again, it was something that was very different because of the way the generations worked. Our grandfather was 9, 10 years old and had to figure out how to make it, and so you grew up very, very fast. Part of the reason why he got married so young, our grandmother was 13 when she got married. And then, 16 when she had our dad. It was just different. Things move more quickly. Our father was the same thing, and our mom, they got married very, very young, and there was more responsibility, and kind of, having a family early was very, very important. And so I kind of had that responsibility being kind of the oldest. And, I think our dad did a great job of, putting that responsibility on me and our mom as well to say, look, you got to grow up fast. You got to kind of be, an example for others. And so it was very, very important that if I didn't go to college, the 40, 50 other cousins that we had down the way probably wouldn't, or if I didn't set the right example, then, we could have issues. And so that went with, not only family, but, business. It went with, how we looked at education and also, obviously the religious part, faith-based part of, what we do and how we look at things. So
Yeah.
very, very important along those lines.
Yeah, it's an interesting timeline as you tell it, being that you and I are 5 years apart, 6 years apart. Tommy and I are 5 as her younger brother, 11 years apart between oldest and youngest, which is
Right.
an interesting dynamic for sure. And I still remember, interestingly enough, that I was not afraid much of mom and dad as it related to my grades being bad. And I still remember, oh my gosh, I got my first report card, first semester of high school. And I was not the stellar student one may expect. So, it was not even a question. The person that yelled at me was you. I still remember the conversation. I got home and my mom says, your brother wants to talk to you. You're at Michigan State at this point. And I didn't just get it from you. I also got it from my older sister. It was like a if any of you have seen Airplane, where they just keep coming and slapping each person in line, like that was kind of the general feeling that it was like both of you just like really beat me up. But I still remember the conversation that you had. Our reputation matters, working hard matters. We worked hard to have a good reputation, go to a really good school, which was Michigan State University. Some may argue it's not as good as U of M. I didn't go to either, so I could certainly have some fun conversations around that. But that responsibility and weight meant a lot to me, of course, but also to a lot of our younger cousins and so on and so forth. So it's hard to do, I would imagine now, as a parent, if your oldest child is not really setting that example or setting that bar, it starts to become much more challenging for the rest of the family, as you said. So I'm echoing this idea of that family environment, of that type of responsibility is not easy. And there's a lot of sacrifice that comes with that type of responsibility as well. For today's day and age, I would say you also got married fairly young. I mean, 23 and, 19 for Sylvia. And then similarly, Tommy did that. I was getting a lot more pressure in the family, as I approached 26 of what are you doing, right? But I think it's a beautiful thing. I mean, family is certainly the nucleus of everything we do. Getting together on a weekly basis is super important, but also you as, not only the oldest, but as a brother and as a friend, but also as a business partner is really interesting. People ask us all the time, like, oh, you guys are brothers and you do business together. What is that like? What is it like to do business with your family? What is it like to do business with your brother. And I would say that for most, we would actually advise against
Yeah.
doing business with family. I think we certainly have a unique, and blessed opportunity to work together. But
Yeah.
want to just hear your perspective on family life and business. And we went through the liquor store, supermarket business, into the hotel industry,
Right.
which was, I think, where we got a lot of our opportunity to learn about the professional side of life. So,
Yeah, I mean, again, working with family is tough, and a lot of it is, again, it's the perspective of where it's coming from, right? So you think about, again, generationally, people always look back, even here in the United States, and say, you know, when it was an agricultural, or I guess it's agrarian, I guess is the right word, like people had a lot of kids because they worked the farm, right? And they worked the farm, and that's how they ate and everything else. And if they could sell something, they would. But as things turned, right, is the same thing. So but our culture kind of kept that same mentality of, family, kids, they all work. You work for one pot. You kind of live in the same area, and you do those things together. And so that's where that responsibility comes in, and that's why there's large families and people might get married young and everything else. So a little bit of that is that in that tradition, but yes, it's not the easiest thing to work together as a family, recognizing on, as we always talk about the why, so as I started to grow up and grow into like the businesses that we were in, there was an expectation you had to work for the family business, and then you had to be successful at doing it. But ultimately it was like, what was the end outcome of the why? Is it because, we're all trying to work for the same goal? Do other people have different goals than others in the family? Like really, what's the reasoning behind it? And so, you get to a certain point where you realize, okay, I might be able to do something a little bit better on my own that might benefit, myself and others in the family. But then, you also don't want to give something to someone. It's like what I say to my kids, right? Like, I know everybody's heard this saying before, but if I give you a fish, you eat for a day. I teach you to fish, you eat for a lifetime. So, I learned it from our dad quite a while ago when I actually, he's always been a great mentor and he's always had great advice. And, he, I was lucky enough to sell my first company, and, I had an equity event, and at that time I said, oh, I think I'm going to do some things for my kids and put money in trusts and all these things. And he said, well, for education, I think that's a good idea, but why would you do more than that? And I said, well, I want them to be okay. He's like, you could work really, really hard. And if you don't teach them how to make it themselves, the day they get the money, they could just lose it all. And what was so good about that? And so more of it's about the teaching and the understanding. I think that's part of why we get along is, and even with everybody that I try and do business with, is like everybody has different talents, and you have to recognize those. And the biggest thing too is your ego has to get out of the way. I kind of say this, and I know others have heard it from me in the past, but like ego doesn't cash. It's very tough, even in our founder-based businesses. We have a lot of founders that we've brought into Fortis and we've worked with, and I've said that kind of, look, it's a tough thing because your ego can't cash that. So if you have an ego when you're coming into relationships like this, it's very, very tough for it to work without really thinking through about, okay, is it really important, and what's really the goal? And so my thought process, and it changed over the years. Always wasn't like this. Was that if I'm doing the best for my family and the best for my business and for those that are in the business, it should work out for myself too, right? If you're around the right people. So I gotta try leaving that ego part of it at the door, and that's a hard thing when if you're the oldest of a lot and put on a pedestal and all that kind of stuff. It's not easy to do. And when you've had some success too, and you kind of look at it and go, all right, shouldn't I pat myself on the back, or shouldn't others pat myself on the back? And that's when you have to just take a step back and also always be looking at who's done better, right? Like, looking at not those that, haven't done as well, but, really looking at folks and having mentors that have done better in business and in life, and kind of having that balance is important too.
Yeah, the term, right, is like serial entrepreneur. I mean, there's this thing of, you had obviously, third payment company, as one of which you founded alone,
Right.
other co-founded,
Right.
co-founded a trampoline park franchise, right. Built that, which was really cool to see. The gym business, which It's obvious. Obviously, you love the gym. You love being a part of the gym environment. You've been in the gym environment since you were 15 years old, or working out and stuff like that. I'm going to ask a question about that part of life. There is this correlation. You and I have talked about it, but I think it would be good for folks to hear about is this idea of the mind, the body, the gym itself, physically working out, and how you believe that has contributed to your success as it relates to being a founder of companies and working through companies. And by the way, I just want to say this statement before you dig in. When people say to me, I don't have time for the gym,
Yeah.
I often have used my example of it didn't matter what was happening in life, how busy things got. It was a non-negotiable. It was like brushing your teeth, twice a day, morning and night. So just want to touch on that a little bit from a psychological perspective and how you view that.
And I don't call myself like a gym rat or anything at this point. No, I'm almost 50 years old, and so it's not the same as it was. But I created a consistency where, for myself, where I don't feel well if I don't do it. And there's many others, that will tell you the same thing. It's part of their life, and if they don't do it the same way, or they don't have, they don't get their workout in, they don't feel good. And, there are scientifically, things like, it releases endorphins, it reduces stress. It does help you to feel really good and all that kind of stuff. Even though as you get older, you have joint pain and all that, and but it's part of it.
It's something you can control, right? The idea also, and there's science behind this, and a lot of thought leaders are coming out with this idea of when things are feeling like they're spiraling out of control as an entrepreneur, which happens quite a bit, as we know. Can't control the entire environment. It makes people mad, especially in a scaling business. And I think entrepreneurs or solopreneurs versus an entrepreneur is an example. One may own a business and they never expand because the chaos may be too great. The control feels that it's out of control. Working out seems to be that place that people can go to gain that control again and start that momentum. And whether it's conscious or not, I think is something that's important to identify, because idea that when I know I hit my target for working out, I feel as though my business is going better.
Right.
I feel as though I'm able to, engage better, and I have these steps in place. And although I started as early as you, I never took it as serious, I think, as I was growing up as you did, partly because, I was a hard gainer, right? As you know, always trying to get that protein in. I can never gain the weight.
Yeah.
It was so painful for me to try. And I wasn't getting often the same feeling until I started to get older and catch it. And I stopped for a little bit. I was like, wait, why do I feel bad? And I remember you telling me this, actually. You're like, my back was hurting, seeing doctors. Like, dude, when was the last time you were in the gym? What are you doing? It's just culture. Like, we grew up culture-wise in the gym. This is how we always grew up. What are you going to do about it? So, very interesting to see that correlation. As you tie that to sound body, sound mind, the very philosophy of being able to run that marathon, so to speak, how has that helped your business in particular? Do you draw correlations between the gym at all and your work, or is it just natural to you?
When there's something going on and you're stressed out, and being able to work out does help me tremendously. Like, I will be working out, and it's almost subconscious to work out, and I'm thinking about certain things, but it does lift a lot of the stress, for sure. But the correlation from, again, it goes back to that discipline part of it. Everybody has a different way that they think about it. I know there's some guys like Mark Wahlberg that goes, I get up at 2:30 to go work out, but he's sleeping at 7:00 at night. It's not like that's just ridiculous to me. You're just sleeping earlier, I mean, it's the same amount of hours. It doesn't, and then he's going. So
you're an actor for a living, you can get away
with it. Yeah. So for me, I don't work. I work out in the morning, but I also work later. I do a lot of our West Coast stuff, so I'm on calls if I'm on the East Coast, 7, 8, 9 o'clock at night, right? So my workouts are based, but I do, it does correlate for me from that my day doesn't get started the right way if I didn't work out, right? I just it starts my day in a certain way, and the days I find that if I had to skip or I had to miss, it's just one of those things that eats at you. And I think it's almost that same way, right? Like, I never was a procrastinator. I always got things done early or on time, right? I'm not the type of guy that's late for things. I'm very like scheduled and I'm very particular about how you know like how my schedule should be and what I need to do to get things done. So, it is also tough when you have that type of mentality that when something does, get thrown off, that there's an aggravation there. And so that's something that, is something I've learned to also work with over the years. But I think a lot of it is when you think about that discipline, to your point, is almost like you don't ever want to, when you're working out, like you're creating gains, and those gains are different things for different people. Whether it's muscle, losing weight, just being healthy, whatever those gains are. I could do the treadmill for 20 minutes, and I could do it for 30. I can increase it, whatever those things are. It also applies that same way to business, right? And you don't want to lose those gains. You've made those gains, and you realize, like, if I don't keep working harder and getting better, I'm going to lose those gains. And it's the same thing in business, right? Like when we think about it, we're making gains because we're working hard, we're working smart, right? And we have goals that we're trying to accomplish. And the time that we decide we're going to step back or whatever, you're going to lose those gains. And so you go in a day and you go, man, how did I do? Did I just take a step back for like no reason? And so, now I got to work twice as hard to get back to where I just was because, I decided to take my foot off the pedal. And I think it kind of, that's the way that's always kind of, I've always thought about it. And I think it's kind of my approach.
Yeah, it's interesting because as we shift over to the conversation around, being the founder of companies, and it is hard work. I mean, we've started very small businesses, larger businesses. Started, with, as an example, if we were to talk about Fortis, it was 8 employees. We are at 300 at this point. The industry has shifted so much since you started.
Right.
A little bit about that journey here, and the challenges that you experienced from what was roughly the year 2000, I would say, and then all the way to, we're talking 24 years of payments under your belt.
Yeah.
First and foremost, do you believe you would have been here 24 years later, still in the payments industry?
No.
In no way, right?
No.
And then second, what shifts have you seen philosophically from like managing where you started and where we've ended up over the years? We can talk a little bit about some of the intricacies of payments afterwards as well.
Yeah, for sure. So I mean, fell into this business because we were in the lodging business, obviously in the hotel business, and it's kind of we fell in just being active in the lodging business, referring business over, and then connecting with Chase Merchant Services and becoming an ISO with them. Focus on that lodging vertical, and so really when you think about it at that time, there weren't a lot of like wholesale ISO relationships. It was mainly retail. You could resell, and what you found is that the business itself was really just about terminals. And so, it was very easy I wouldn't say easy is a bad word to use, but it was, people could just walk in. The business was just based on feet on the street, walk in, and what's your rate? And let me give you a free terminal or sell it. The difference that we had early on was really starting in embedded payments with the first embedded payments, which was in lodging. Lodging and restaurants had really embedded payments to start, especially lodging. Their property management systems very early. And so what we were able to bring at that time was the vertical expertise where there wasn't one. And so that's where the success came from. So leveraging, Chase Merchant Service, Chase Payment Tech tools in a specific vertical, and just really bringing industry knowledge and kind of being a champion of the vertical create a success.
You're saying that because obviously, as I mentioned earlier, families in the hotel business, you're running hotels.
Right.
You understand the management of hotels.
Right.
You also understand, oh man, what's this thing, this chargeback I just got hit with? Oh man, my payment's double posted.
Right.
At that point in time, if we were to look back, I mean, we're going back to 2000 and I was with you there at the hotel at that point in time. The systems were finicky, although embedded.
Right.
All of a sudden, every transaction double posts.
Yeah.
All of a sudden, a chargeback comes in. Now, it's interesting because this was an emerging market. Not everybody had payments. In our supermarkets at that point, we still hadn't accepted credit cards yet because they hadn't created an interchange for supermarkets that made it worth it for them to actually do that.
Right.
But hotels were certainly on the front side of that because when I started at the hotel, I would sit there and take those little slips after everybody checked out
Yeah.
and key them into that box, the
Yeah.
trans.
The terminal
the
until it was fully embedded.
Until it fully
Yeah.
got embedded, which really started to come in, because 98 to 2000, you figure we
Right.
weren't really that embedded.
Right.
Then we got the embedded system where
Right.
we're swiping at
Right.
the counter.
Right.
All sorts of fraud starts happening. People
Right.
using other people's cards. Chargebacks becomes a thing. I'm forcing transactions to get money off
Yeah.
of people's cards.
Right.
And I got in trouble for that.
Yeah.
Early on, I learned that trick. It wasn't a good one. And lost chargebacks that way. But you already had this experience now. So you're saying, hey, as a champion of the vertical,
Yep.
I'm able to go and start calling on other hotels that you were on, the board of advisory council for one of the brands, and started
Right.
working that way. And you go out and say, hey, look, there's this hotel opportunity. We can actually save you money on your fees. And when fees are only 10% of your business at that point, nobody cares. So
Right.
we've literally watched this industry go from it being 5% of our business, 10% of our business payments,
Right.
to now 100%. There are businesses that don't accept payments at all. So
100, yeah.
back to that part of it, just cutting you off there, just want to make sure I clarify. Champion in business because we were in the hospitality space.
No, for sure. Yeah. I mean, like I said, like growing up in that business made it, kind of a natural evolution and win to be able to, talk the talk and walk the walk. And again, understanding the little nuances that come with it, right? You understand the night audit. You understand, like, when you're going to cut over a hotel. Don't do it over the weekend. Don't do it on Friday, right? It's all these little things that we understood. And then we brought people on that understood the business. So we had relationship managers that could help. So that's where we found some success there. And then, got lucky and, iPayment, really had an acquisition strategy at that time of, buying businesses that they liked in certain verticals as well. So, they liked that this was in lodging. So, and in 2007, I sold that business to iPayment, and it was a really good thing at the time, especially although I was very young, didn't understand exactly how it was all coming together. It did help to accelerate my exposure to kind of a larger part of the business, and in iPayment, it was founded by Greg Daly. He founded the initial PMT, which he sold to U.S. Bank, which is today Elavon. So, one of the kind of the pioneers of the business. So spending time with him was great as well, and really learning. So, stayed on there as part of an earnout for 3 years, invested in other businesses. And then, as non-compete was coming up and, finishing up, then I said, well, I don't know, should I stay in the business or look to do something different? I was doing some other different things.
Sure.
And I had a good conversation with iPayment at the time. And they said, don't go anywhere. Like, we'd love to give you a good deal and have you to continue to operate with us. So, started again, kind of with the same thesis. Obviously you came on at that time, which was great. And what was interesting about that, though, to your earlier point around, how's the business evolved? At that point, it was still kind of just reselling, and it was about service and everything else. And a lot of even my friends that were really going to say, oh, look, all we're doing is moving business from one place to another. And First Data really had everything. Everybody's really moving First Data stuff around between Elavon. And then, with the advent of AWS and, servers becoming so much cheaper, you start to see that there could be an opportunity for, cloud-based ISVs. And so we start to see that happening. We started to actually work with some of them in the lodging space and others. And we said, okay, this is an opportunity for us to be able to, build our own payment gateway.
Sure.
And, that came through on our Cairo channel, of course, as we were trying to kind of get into that channel. And so the business has evolved. And, obviously we built our own payment gateway at that time and started to integrate and embed. And that's really where we start to see some big changes. And we also had good timing around EMV. There was folks were forced to have EMV terminals in the retail
2015 or
so. In the retail environment. And so we were one of the first to have EMV integrated into our gateway, and also have cloud EMV, which was a big deal. And so we really start to see some things move at that time.
Awesome. So here you are. You now have a gateway that has been founded. Mm-hmm. The gateway is really what allowed Fortis to shift from just a old school merchant services ISO to more of a fintech approach, allowing really fully embedded opportunities.
Right.
Everybody started talking about gateways. That was the buzzword. And I think now we've seen this next level of evolution in the payment industry. We're going to talk just really quickly from your perspective, as you've seen how it's all shifted. We've talked about it in the past. Oh man, like in 2005, man, payment industry will probably kind of be gone in 2010. In 2010, 2015, like how much longer can this go? It gets commoditized. To your point, there has been this idea of the payment itself being commoditized, but the representation of who it is that brings the payments in, if you will, has shifted from the independent foot on the street that lasted from the 90s through the 2000s into maybe that EMV era of 2015 to now this next decade of 2015 to 2025 becoming the birth of and push of the integrated embedded software, which, like you said, hotels have had this for 25 years.
Right.
Restaurants have had it for 25 years.
Yeah.
The medical industry, well behind. You go into all the service businesses, really well behind. We're now seeing the emergence of ERP, enterprise resource planning, being something where when I used to hear ERP 10 years ago, I'm like, what are you talking about? Just like how APIs were in 2013, 2012. Like, so you have an API to connect when we were at a chiropractic convention. Like, API, I'm Googling that in the back. Talking about, hey, bro, you know what this API thing is that they're talking about? Similarly, embedded, what is this embedded? APIs, embedded, now ERP. So kind of this shift over this last decade of software providers becoming the new partner relationship. And then also we'll talk a little bit about ERP and what we're seeing happen in the B2B world.
Yeah. So when we think about the embedded channel and, I would say where we are today, if you just thought about it, is like we're kind of middle innings, right? Like, you had like, you said like 2015, the EMV and kind of getting into it and everything else. And what's been interesting on the embedded side is even in the last few years, how much it's changed. And what I mean by that is you take the way that, an ISV approaches payments, right? Like it's a necessity. It has to be there for them. They are very focused on their SaaS fees, right? Like that's where they make money, but, as payments become a larger part, then certain ISVs, they need to, have a focus on it. And when you look at the last couple of years, that's where, that's where the PayFac kind of came from, right? The PayFac idea of like, let me control payments. There's one merchant of record, and then you can have all these other, sub merchants downstream, and the ISV can control it, and they can control the economics and all this kind of stuff. And what's been interesting is the shift kind of very quickly to that's great, but I don't get any adoption. I don't get any adoption as a reseller of this PayFac model. Some very large ones do, right? Like that's they're able to do that. Like you think about a mind body, right? That's always going to work in their case. But our customers, right? They need this like kind of guided journey, and the ones that we focus on today, that whole channel is very much open for what we can do from an opportunity perspective, right? And the tools that we provide. So the way I think about it is that software, it's not gonna stop with what the connections need, the connections that certain businesses need, right? And so I think that that's going to continue to grow, and as more businesses grow, and the evolution of the embedded software itself in the way that people run businesses. And again, it goes back to what I was saying. When you think about AWS, it changed everything. To have an on-premise server-based software was very expensive.
Not just to bring it in, but to manage it.
To manage it, thousands of dollars, and then depending on security and all these kind of things, right? Now it's all in the cloud. Sure. So today, somebody even like us, when we created Zeemster, which is today the Fortis Gateway, we thought about like how much more it would have cost us to have servers, like physical servers. Was crazy. And we were able to do it for so much less and be able to become successful as a result of it. So the same thing, ISVs can access that. And so that's why there's so many more ISVs. There's so many more different ways that people are looking for ways to help businesses and how they manage and operate. But for us, like I said, I think it's very much middle innings. Like we are in a good spot. I don't think that it's going anywhere. And I like the shift that I believe that I'm seeing. Like when you think about some of the folks that are out there that are just doing payback only, and even the providers of the kind of payback experience have had to take a step back and change their own models.
Sure.
And that's been a benefit to us for sure.
Yeah, and also I think there's a high level of uh, appreciation today for relationships.
Yeah.
So, like, if we were to go back in time
Mhm.
and we were to look at the evolution of business in general,
Mhm.
so we'll talk really quickly about the 40s, the 50s, the
Mhm.
60s. I mean, even like you go into the 20s and the
Mhm.
30s, and yeah, those shows, the Foods That Built America,
Mhm.
things like that. But what you see is everything was very closely knit.
Right.
You knew everybody. You knew the person you were getting your food from. You knew the baker.
Right.
You knew the milk. The milkman that would drop off the milk,
Yeah.
so on and so forth. It was this like really nice experience where you would have somebody walk in and sell you a vacuum cleaner door to door. There would be all these experiences of door to door. Around the 80s is when the mall birth, the birth of the malls really came in.
Mhm.
70s, 80s, but like that idea of the 80s and the 90s, people spent time at the mall. They
Mhm.
enjoyed these big boxes. They started to kind of go to this faceless experience. The experience that really we've seen evolve over time to even particular technologies that basically say, don't call us, don't talk to us.
Mhm.
And there is a market for that, by the way.
Mhm.
We're not discounting that
Mhm.
market. Stripe is a quick example to
Mhm.
say, hey, look, just go.
Mhm.
If you know what you need, this is a place, come
Mhm.
grab it and move on. But what we have found, in my belief, is that there is a huge population, majority, not minority,
Mhm.
that appreciate the relationship.
Mhm.
It's what some have done really well to bring the people part, not compensating for the technology.
Mhm.
The technology is necessary. We talk about this. Okay,
Mhm.
we need this tech. We
Right.
need it to work. That's a given. It's almost actually flipped where the standard used to be, oh, you have the people are good, do you have the tech? Now it's the tech needs to be there. It's got to be a given. Do you have the people?
Mhm.
Do you have somebody I can call, somebody that can help me? And even in the Amazon model, although the AWS was game changing, even from what we see from Amazon Prime and shipping us items, there's this going back in time to the 40s and 50s. Things are getting dropped off at our houses again.
Mhm.
And this generation has never seen it before, but our grandparents may have understood that more than we had
Right.
understood. So with that being said, this idea of fighting the people part of it has certainly come full circle, in my opinion.
Mhm.
I think the guided journey is exactly what you
Mhm.
express, which a lot of our values are based on this remarkable experience, the guided journey. Do you think, even in the face of AI and all these things, that it ever goes away? Or do you think that people themselves are always going to have this necessary, like what separates us is Jimmy versus
Mhm.
nobody? Or,
Mhm.
that the people that are involved definitely make shake hands, events, trade shows never went away. People thought post-COVID, COVID doesn't happen, everybody would stop events. Why go to a trade show? It's the furthest thing from the truth. People's energy, why people go to concerts and things like that matter. So just the perspective on how important people are in relationships in the payment industry is something I would love to hear your perspective on.
Yeah, I mean, again, like if you think about it, um, the ability to have close knit relationships in any business that you're in is super important. And I was always like an advocate of this, right? So if when we were in the hotel business, I was very active in everything that I could be active in, whether it was, local community stuff. Like you mentioned, I was on an advisory board for, one of the franchises we were with. I was on the board of directors for the Detroit Visitors and Convention Bureau. Like, being involved in making those, connections, but you have to be genuine about it. Like, you don't want to help. Like, you really you're helping yourself by helping the cause, right? And so I think it's the same thing, and I think it's very important. So when you think about like the evolution of like our business specifically, having relationships with large partners like an iPayment PaySafe, spending time with folks at the processor level and doing all those kind of things, understanding that we are, even though we're a big business, where the business itself, payments itself, we're really small. Like everybody kind of knows each other. And I think it's really important to have those relationships and always try to do the right thing.
Absolutely.
And so that's important. But overall, like, yeah, I mean, I think there are certain businesses that you don't need a human touch in a lot of ways. I think but we've seen it because when we think about where we sit, right, we sit above Stripe,
Right.
and there's a reason for that. I mean, and the reason is because that ISV needs a little bit something. They need a little bit more. They need to talk to somebody. They need to be able to be in a position where they can talk about what they need and some of the nuances to it. And then when they're leveraging something like we do in our guided journey and in our sales assist model, how we help pull through, for their customers and how we monetize it, like all of that is something that has to happen with kind of the human touch and the relationship. So it is very important. And at the end of the day, when you think about our look, we have two customers. You think about it, right? You have the ISV, then you have the merchant, right? That's downstream, our kind of merchant that we share together, right? It's so important for our partner to be able to have somebody to contact, and when there's an issue or when they need to understand a little bit more about their business. And remember, our strategy in the guided journey is not just from we sold you, we integrated you, right? And now, we wanted to have some pull through. We have a team of folks in the partner success team. It's their job to help these folks to, pull through their merchants and what can we do better for your business, and listening to them on, what their roadmap looks like and how we fit into that and how we can help them.
Yeah.
And so that's very, very important. You can't do that without having that connection. To your point, like, Stripe can just go, play in our sandbox and here's our APIs, and that's kind of it. But if you want something more, it's on you. But if you want something more, and I think there are a lot of businesses that need that and will continue to need that.
The word embedded then even is deeper for us. The idea of being embedded isn't just about a technological embedded experience. It's actually a business embedded experience, a human embedded experience. Your folks, ours. And it is a point of success. Even when you think about other industries outside of payments, when you talk about the healthcare industry as an example, there's a reason why there are representatives going out to physician offices and expressing this support for products and services that they may offer, because without it, the physician office may be too busy to deal with how I'm going to figure out all these aspects of business.
And that's actually the best point of it, right? Like that's really what it comes down to, where I think the full PayFac, registered PayFac offering has failed. Which is good for us, by the way, has failed for the kind of the mid market, right? Because these ISVs look at it and go, oh, I know I need that, and I know I want the economics I should be able to do, but they don't have the time. They don't have the time to underwrite, to handle risk. They don't have the time to onboard and do and just customer service, all the things that we do really, really well. And so, but how can you get that across to them, and who can they leverage? It has to be with people, right? And that's very important for sure.
Absolutely. Are you seeing kind of this birth? Why do you think this whole ERP, enterprise resource planning, is a thing? For those of you that don't know what enterprise resource planning is, these are these ERP systems that are essentially QuickBooks on steroids. A lot of us have used QuickBooks in the past, or small businesses in our software. You have products like Sage that offer several sub-products under Sage's umbrella. You have Acumatica. You have Microsoft Dynamics. There are all these products that exist, and it's like we're hearing it more than ever. I mentioned earlier, 10 years ago, we never even knew what it was. Now it's like, hey, what's going on? We understand that there is something to do with kind of everything being connected, Internet of Things, so to speak, that's allowed for this technology to be possibly more affordable. But why now, and why is it so important, do you believe, to businesses to have this type of solution?
Well, I think first of all, from an affordability standpoint, it's actually kind of the opposite, right? So when you think about it, you think about QuickBooks, right? So QuickBooks or Peachtree, even, which is Sage 50 now, right? Those are simple plugins that you can use to run your small business, right? But when you think about NetSuite and like Sage Intacct and Acumatica, these are very enterprise based. These are where like larger businesses need to be able to leverage their products, and the VAR themselves that comes in and helps them to make a decision and then implement these products. It's not cheap. It's very, very expensive, but it does streamline a lot for their business. the reason why I would say, going back to the kind of baseball analogy, we're early innings in ERP, that side of it is because the B2B side of it, and even some of the B2C, but the B2B side of it especially was always traditionally like, invoice and then I pay you with the check.
Yep.
Right. So that volume was very much, invoice, I pay you with the check. And so as again, things have evolved and you have, different types of larger merchants actually leveraging the products, right? Saying, look, and recognizing that they need it. I can't run, my 50 location cupcake stores, whatever it is, on QuickBooks. It's just not going to work. Like I can't do it. I need something more than that. And then they leverage a product like NetSuite or, again, Sage or Acumatica. Then, from there, they're like, okay, it'd be great if payments were embedded. That I could just have, the payments embedded, whether that's, credit card, debit, ACH. Like I need to have that so that, I can run the business, in a fashion that is just as streamlined as the software is created for me, right? That's where you're kind of seeing it. So there's a shift that's happening or continues to happen as there are more folks going to these types of ERP solutions,
Right.
where and that, a lot of that is just the way that the business has grown and evolved, especially here in the United States, where that leverage is needed for folks to run their business easier, and so that does help for sure. But I think we're definitely early innings. A lot of reports you see, it's a massive, growth sector in
Yep.
business to business, and I think it's going to continue to grow. And I think we're in the right spot with our partnerships for sure.
Yeah, exciting times. Sheesh. I mean, you and I now have been doing business together since the first business we opened together in 1995, 1996, when I was 15 years old.
Mm-hmm.
We opened up a pager shop, which became cellular.
Mm-hmm.
In addition, there was a pizzeria involved there and a video store for those of you that know video stores, Blockbuster Video. Yeah, we did that as well at the time. Early bouts with entrepreneurship was really interesting for us. And, people have asked me questions like really interesting, like, have you ever beat up your older brother?
Mm-hmm.
And I think one time I punched you while you were sleeping.
Mm-hmm.
That was the extent.
It must have been very light because I don't remember waking up to it. So
Your head wasn't hurting
I
when
don't
you woke up
remember
at
that.
all.
Yeah,
It wasn't
I don't
like,
think so.
all right, that was the one time.
Yeah.
It's always been a little brother, big brother situation.
Yeah.
The joke that I've always ran with, just for the audience to understand, because people are always intrigued by brother sibling businesses, but also just how do we work together? We live 3 doors away from each other, 3 doors down, and our kids are fairly large gap in age, but we're always together, which is really cool. Being the younger brother, I've always actually worked with you. I mean, pretty much always is how it's been. It's been a lot of fun doing that. But if any of you have seen Twins, my joke was always that he was Arnold Schwarzenegger and I was Danny DeVito, that when the food would hit the table, I said earlier I was a hard gainer. It was hard because I couldn't get to the food at times, and he mentioned he was a little bit chubby, so you can imagine how this all kind of came together.
No, you just were very spoiled and finicky.
There you go.
That's all it was. Very spoiled, very finicky.
Different seats, different perspectives, right? For those of you that have
you wake up dad and mom in the middle of the night for cereal and French fries.
And I would hardly eat any cereal, by the way. I just wake up, my mom and dad, tell my dad I want him to take me downstairs. I'd eat 3 bites, and his hair was a mess, and he just got off at the supermarket. That's what I would do. But it was tough. I'll just be honest with you. I mean, you don't have green eyes, and you don't have the muscles, and you don't have all the charisma. You just kind of live with what you have there.
Right.
But
you've done fine, I think.
No, it's really been amazing and fun. So I'm sure we'll end up taking a lot of questions from people. There'll probably be a poll out there. I've heard about it, of the better looking NAFSO. I know again I've never won that battle either, but it's been a lot of fun. With that being said, had a lot of fun talking to you. I was actually excited to do this, man. And for those of you that don't know, my nickname for him is Jimbo. And I've always enjoyed being working with family for me has been amazing. And as I said at the top of the hour when we were talking, like, man, it is tough. I mean, a lot of times it's tough to do business with family. The thing I think that we've nailed really well, and a lot of this came from, we'll shout out Traction and EOS and our implementation of that program in around 2014, 2015-ish, and our ability to communicate. We do things like same page meetings.
Yep.
We have a weekly level 10 meeting that we have, and it's on our calendar on Wednesdays, and we just say it's Jimmy and Timmy, all things. With our other brother that we also do business with, we have meetings, and we kind of always make sure that we meet really well. And if we can communicate through meetings, back to your comment about egos, I think you've really led that charge, because the older sibling, obviously, if there's a big ego there, it's very tough for a younger sibling to get over that or really shift or adapt to that. But we've done, I think, a really nice job so far of being able to communicate through things, talk through things, meet through things, and I've certainly appreciated it. So
likewise.
Good
stuff.
Thanks, Jimbo.
Thanks, Cito.
Awesome.
All right.
Great. Thank you for listening.
3 key takeaways from this podcast. Number 1, we heard how the industry is moving away from terminals and more towards software-based solutions. Embedded payments are on the rise, and partnerships between these software providers and payment processors are becoming increasingly important. And this is key for understanding the future of payments and how businesses are going to take advantage of these trends. Number 2, relationships still matter in the B2B industry. Even with automation on the rise, Jimmy emphasized the importance of building strong relationships with partners in the payment industry. And unlike some self-service solutions, a human-to-touch approach with dedicated teams can provide better customer service, navigate complexities, and build long-term partnerships. And number 3, get ready for embedded everything. The Nafso brothers highlighted the growing trend of embedded payments, where payment processing seamlessly integrates with existing software systems like ERP systems. And this goes true with other software as well. And it's a game changer for these large businesses who are streamlining and reducing their errors by eliminating the need for separate systems and manual data entry. Well, that's the episode of Embedded. If you found value in this episode, please leave us a 5-star rating and subscribe to stay up to date on payments, software, and emerging technologies.